Hey everybody, hello and good morning. My name is Darius Anucauskas and I'm the global market analyst here at Markets.com, and today is Friday. Look, what a week we had. We had a very crazy one. In my opinion, we had but again, for some probably it kind of gave a lot of opportunities. For some, maybe it was a little bit on a devastating side. So, look, the volatility was off the roof, through the charts, through everything, whatever you want to use, whatever terms you want to use. But the activity that we saw in indices, I mean, that was wow. So, ladies and gentlemen, we're going to pick up on all that. There are a few important economic data sets that came out and some that are coming out still today, so let's talk about all that in a bit. This is the video preview for the webinar, which is going to happen in a few seconds, so do not tune out. Hopefully you'll enjoy the session, and I'll see you in a bit. Alright, okay, ladies and gentlemen, hello and good morning. This is me, Darius Anucauskas from Markets.com, and today is Friday the 11th of April 2025. I hope you're all having a wonderful start of Friday. Look, before I jump into the action, let's quickly have a read through our risk disclaimers. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I'm gonna fix a little bit my microphone here. Yep, so that it wouldn't be in my way. Also, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, I would like to jump into the markets. Let me just adjust my screens here. And the first index I want to pick up here is the Japanese Nikkei225. Look, I mean, what a week we had. And nothing is related to basically economic data. Mainly, it's all tariff driven. And I think that the market could remain somewhat like this. Right. First thing first, before I even jump into the fundamentals, looking at the technical picture, this week I talked about it, and last week I talked about it, and I said that, look, if we do start clearing this 35,111 territory, I'm leaning towards the downside, towards my 30,374 territory. I mean, look at this beautiful move. I mean, it just worked out like a charm. This week on Monday, we were kind of already testing this 30,374. Then I said, look, if it's going to hold, I'm going to consider a rebound. And we got the rebound. We got a rebound all the way back to that 35,111 territory. Found good resistance there, and then we moved back down. Look at this. Very nice, very beautiful, very technical. So I'm happy about this. This worked out great. Now, what's next? Well, next is, first of all, I want to pick up on the economic calendar here. So I'm going to jump into Friday here. So look, on Friday we didn't get much Japanese data. Basically, there was some data on Thursday. The PPIs that came out, they were on the higher side. Today we're watching the US PPIs, by the way, but I'll get to that in a bit. For now, in terms of Japanese data, nothing major. I would say going into next week, that's where we will start kind of picking up on data a little bit more, because again, industrial production is coming out from Japan on Monday. Tuesday, we don't really have much stuff here. Wednesday, it's going to be the machinery orders. Again, everything is industrial, everything is production kind of driven data. It's actually going to be quite interesting to see, because again, if there is some sort of a slowdown, then we understand why. I mean, the trade balance, that's what we're going to be keeping an eye on Thursday from Japan, and on Friday, we're going to look at the inflation figures from Japan. Again, but until then, I think the market will be, or this index will be very highly manipulated by other stuff, which is related to tariffs and what's going to be coming out of the White House. So at the moment, I would say just be careful a little bit and we can look at this, like I said, from the technical perspective, but probably not all traders will like that because, well, you'll have to wait a little bit more and I'll explain what I mean here. Because for me at this point now, given that we've tested all my sides here, all my levels, all my areas, I'm taking a little bit of a pause. I'm taking a little bit of a cautious approach because basically I need to see a clearance through one of these sides here, either through the 35,111 territory here to the upside in order to consider higher levels, or I need to see a drop below the 30,374 territory right there, and then we'll go from there. This would confirm a forthcoming lower low, potentially attracting more sellers into the game. Now, this could, like I said, this could open a nice door to some of these levels, but again, let's not rush into things. Let's go slowly on this, step by step. But I will say it this way, while we remain in this territory, I'm just observing the price action. I do understand it's a very wide territory, but you know what? In these circumstances, it's better to be safe than sorry. So that's what I'm saying. So, you know, that's where people sometimes jump in. It has been a really like American roller coaster ride, and literally. And I'll get to, like I said, the US indices here in a bit. But that's why I would try to take a bit of a cautious approach and just kind of while we stay here in between these two territories. So let's see. Again, I know, not fun at all, but hey, it is what it is. China 50. This one is rebounding nicely. And I said to you previously, and I'll say it again, that look, at the moment, we are looking at China from slightly better angle than the US, because again, all these tariffs, yes, they're hurting both sides in a way, but in my opinion, they're hurting the U.S. consumer a little bit more than the Chinese consumer, because again, China can continue kind of trading with the rest of the world. Yes, one big market out, but hey, it's like I said, it's still the show continues. The show must go on, and it's just that one viewer has kind of jumped off. You know, okay, you're not going to stop the show, right? The show continues. So that's what I'm saying. Yes, less popularity, but still attractive, and that's what I'm saying. So at the moment, that's why there is money pouring into China. Just because again, it is believed that China could kind of take that, you know, could take that stronger kind of side in this case. From the technical perspective here on the China 50, I would say if you're looking at the this downside line, then it kind of makes sense to continue monitoring it, because again, it is this this barrier from which we could consider slightly higher areas. Now let me just get rid of this a little bit. I want to redo these arrows here. So for the upside, yes, as I said, a break of this downside line is required. Also, a push above all these EMAs on my daily chart could be nice as well. Now, oh, by the way, I forgot to put good morning in the chat room. Good morning, everyone, ladies and gentlemen. Yep, there we go. So yes, if you're looking at the downside scenario, the downside scenario is not off the table still, because again, we're still below this downside line. But again, some confirmation reversals are still needed. So some confirmation rejections are still needed. So before we can consider a move back down. So if we're looking at this, let's say it doesn't travel higher, let's say it doesn't test the downside line, but instead it, let's say, just pushes back down and remains below the 200-day EMA. Now that's where it could become quite interesting. That's where we could see like a nice move back down. Let's jump into the Dow Jones Industrial Average. We're seeing, look, I talked about this a lot, and this week I covered the CPIs here. I covered I threw out another video. You can check those out here. This is the top news with me, and where I talked about this idea that yes, great, we had a rally, fantastic. Everybody was happy, right? Everybody was enjoying life here on on Wednesday. I mean, that was a spectacular move, to be honest. But the thing is that I'm still, as I said before in my webinars, I'm still bearish. As I said on Wednesday, even before we had the rally, I said even if we do retrace back up, because again, one person has the power, and look what happened. One person did have the power, and he did, kind of reiterate his words, and we saw the stock market kind of pushing higher. But the thing is that the damage in a way is done already, and I would be really, if I'm an investor, right, I'm really cautious right now. Yes, the stocks are at a discount. However, who says that, some sort of like craziness like we had right now could not repeat? Of course, it can repeat. So that's probably the problem of everybody right now. Everybody kind of like lost this trust maybe, and that's why there is a chance for this one to actually to drift back down again. Now, I'm not saying that straight away to the downside here, no, but actually let me get rid of this thingy here, this measurement here. So I'm not saying that straight away to the downside, but again, we could start being a little bit wobbly back and forth. Let's get rid of the Fibonacci, no longer needed. And at the moment, I'm loving the area right here. This, the highlighted zone, the psychological 40,000 here on the cash index. If we remain below that 40,000 zone, I'm going to continue targeting the downside, ladies and gentlemen. I know ideally it would be better to kind of wait for a drop somewhere below here. And by the way, I do like this area. I do love it, but I have to admit that maybe slightly lower levels should be monitored as well. So let's put it this way. This is the area that I'm watching here. Let me just kind of brighten it up a little bit. There we go. So I'm watching this whole 37,000 mark, and that's what probably I'm going to stick to if I'm looking for some lower levels. But in general, I'm going to be cautiously bearish. If we continue to trade below the 40,000 zone here on the Dow Jones Industrial Average, but I'm going to get more comfortable with the downside if we do fall below the 37,000 zone. So that's my kind of game plan. I know, not fun. I get it. We have to wait for a little bit longer on this one, but look, like I said, I rather stay safe than sorry. So what I'm going to do next, like I said, I'm going to watch this. For me, the upside scenario, yes, if it starts pushing back into the 40,000 zone, okay, we could maybe consider some higher levels, but I am going to be very careful. I mean, I'm going to be cautiously bullish. I'm going to then aim for this downside line taken from the high of the 20th of February. And then we'll go from there. If we clear that downside line, okay, wonderful. I mean, I'm gonna consider something like this. Let me just get rid of this. There we go. I'm gonna consider, yes, some higher levels, but again, there's a lot of ifs. There's a lot of ifs, and like I said, you really need to see some sort of like stability, some sort of like a quiet period from the White House. Let's say not attacking any other country. Which is apparently a problem or like a difficulty. But yeah, I mean, at the moment, I would say just be careful, be cautious. Let's see what's going to happen here. I'm going to be, like I said, I'm going to still lean a little bit more towards the downside, but hey, let's not rush into things, and we'll go from there. Look, the S&P 500 also looks interesting, but look at this. Like I said, look at these American roller coaster rides here, and I mean, so far this is still bearish, to be honest. Look at this reversal. It traveled nicely to that 5,500 zone, had a great hold up there. Now I'm keeping an eye on this 5,385 territory. I'm gonna look at it. If we're gonna hold below it, yep, the downside scenario is still valid. And very quickly on NASDAQ again, what a look at this amplitude of movement here. I mean, this is just crazy. So long story short, the Fibonacci can go. I think that we can now just kind of stick to this little short-term downside resistance line taken from the high of the 21st of February. And if we can clear that one, great, I'll consider some higher levels. But at this point, still the downside scenario is not off the table, ladies and gentlemen, especially if we start falling back below the 18,300 territory, somewhere around here, which is marked near the lowest point of September of 2024. And then we'll go from there. So for now, like I said, for now, this is what my game plan looks like. I am honestly, like, today is Friday. Today we could see some craziness. And by the way, today we do have some economic data coming out, quite important, because look, I did a piece yesterday on the CPIs and then on the PPIs, but just kind of, if you can watch that one, but just briefly going through it. Where's that? Thursday. So we got the US CPIs. There we go. Those came out at 2.4, lower than the previous. So this is something, you know, to kind of support the potential cuts of interest rates. And I think that this is something that, you know, the market is kind of looking at right now. So in a way, we're going into May. At the moment, of course, the forecast is not to see a cut again, but this week, I mean, if we saw this week, it's good that I have recordings of this, like of my sessions, because I was looking at the Fed Watch tool, and yeah, I mean, look, this was just a crazy movement. And at the moment, we can say, like, yesterday was around like 80 something again. In the beginning of the week, it was we already were pricing in a cut. Not pricing in, but like taking considering the probability was higher for a cut to see in May. And now, then yesterday we shifted back up. It was like at 80%, something like that. Now it's again diminishing. So not to see a cut. So look, it's all over the place. It's good. Like I said, it's good that I'm watching these. But what's interesting, by the end of the year, we are now expecting for the higher probabilities for a 1, 2, 3, 4 cuts, to see 4 cuts by the end of this year. Also, something that I mentioned yesterday, that this number will probably fluctuate between 3 and 5 all the time now. So just to kind of keep the thrill, if somebody's not thrilled yet. But yeah, at the moment, like I said, at the moment we're watching carefully the Fed, really looking forward towards the 7th of May meeting, and especially the press conference. I think that they might stay with the same interest rate, probably not really rushing in, unless the stock market will start falling apart. Then yeah, then maybe they will jump in with a rate cut or something like that. But at the moment, we're monitoring the April activity very carefully in the stock market, and we want to see if there's going to be anything worse, to be honest. And looking at these indices, personally, I'm not really very bearish yet. For me, the bull, not very bullish yet. Sorry, I'm a little bit more on the bearish side, because this can, like I said, the confidence is shaken, the trust is shaken, and it would really need to, like, we would probably need to see tariffs moved away from China. That's where that's where it could become a little bit better, because again, at the moment, these big tariffs on Chinese goods, in a way, we can actually just purely say that this is like a pure restriction of Chinese goods into the US. So that's in another way of putting it. 125% on goods. Come on. So yeah, we'll see what's going to happen. I mean, there's a lot of U.S. companies that are tied up with China, and that's our like everybody's favorite iPhone, right? I mean, guess where that one is built? So that's what I'm saying. So we'll see how it goes, of course. We'll see what's going to happen. Certainly exemptions, as I mentioned in one of my videos previously, exemptions are something to keep an eye on, because again, exemptions are going to be the topic now, in my opinion. We'll see what's going to happen there. At the moment, like I said, we had this big tariffs on the whole world. That's when the stock market was collapsing. Then he comes out saying, okay, we're going to pause this, but we're going to keep the 10%, but we're going to pause. the other big tariffs. I mean, in my opinion, was all to do that, they wanted to put initially like 10%. It's just you ramp up initially the craziness that you're gonna go all in, like, or like big time, you're gonna go in big time with tariffs, and then you see the market reaction, and then just to calm down everybody, you kind of say, okay, we'll keep it at 10%. So it kind of, because maybe the initial goal was 10% on all countries, apart from China, because maybe the whole, but the other goal was to kind of to drop the Chinese dependence on goods and services. So yeah, they're trying to do that. Of course, it's harmful, but what can I say? It's pain first, then gain. Let's see if that's going to happen. I mean, this is a bit of a wild card. There are a lot of critics against that, and at the moment, it doesn't seem like a good case, just because the mentality of the country is to consume. So when you have a very strong consumer mentality in the country, it's difficult to jump off from that needle of cheap goods. So yes, that's the issue, what I'm seeing right now. So yep, and I think not only me, and the majority of people are seeing this. So let's see what's going to happen. But again, for now, I'm still a little bit on the bearish side. Let's have a look at the VIX. Look at this. I mean, look at this volatility. I mean, honestly, crazy. This was just crazy. On Wednesday, we reached a maximum here of 40, almost 44 on the VIX. Wow, I mean, that has not been the case for quite a while. Back in 2020, that's when we reached but now look, I mean, we've reached that 44, and we are dropping back down. We have stabilized near the 34 zone, 34, 35. But let's see if the market kind of calms down. But again, this week, I think we will start ending with a little bit of a bang. Dollar index. Amazing. Why it's amazing? Because in this video yesterday, you can check out on YouTube here, I threw out that I am still bearish on the US dollar. We were at around 101 and something. I said my target is the 100 mark. And wait just a second, it's kind of stuck. There we go. My target was this upside line taken from the lowest point of July of 2023. We got the magic reach, fantastic, good result. But what I didn't expect, that is going to break the upside line, and we fell, and we stay now below the 100 zone. So if it's going to continue to trade below that 100 zone, below that 100 level, ladies and gentlemen, I'm still bearish, but I'm going to be very careful. I'm going to aim for the 99.24 territory right here first, which is, like I said, the lowest point of July of 2023, and then we'll go from there. And for now, like I said, this scenario looks to me like this. And if by any chance we climb back above the upside line, then okay, great. We could, consider maybe slightly higher levels. I'm not saying that we will get positive here, no, but I'll consider slightly higher levels, and then we'll go from there. The German index DAX, let's have a look at this one right there. Let me get rid of, actually, you know what? Let me get rid of everything here. Let me get rid of all the drawings, and let's have a fresh look. Look at this. In general, what can I say? The stock market here, the German stock market, had a fantastic rally this year. In the beginning of this year, we saw, nice moves here to the upside. I mean, look at this. From 2nd of January, when the market opened, we rallied, and at one point we reached 18 with a little bit of percent. So we reached something like that, and then we hit the area near the 23,500 zone, and then from here it all went down the drain. So because from here, well, actually, let me just do it this way, and let me grab another measurement. So from that peak, this year's peak, we have dropped almost 20% at one point. Now we're only, let's say, in the at around minus 12%. the thing is that we're still in positive territory. Look at this. So this is where we started the year. This is where we are right now. So we are still in positive territory. And okay, look, it's a good. It has been a good run. Now the question is, can we fall back again below this little area, somewhere below this 19,700, 800 zone? If we can fall below this, yep, I mean, this of course will be very negative and we could see further declines. But I think that we could also, on the German index, we could start looking at some lower levels if we do fall below the 200-day EMA, which is, as you can see here, it's maybe not very visible, but it's here basically. This is the one that I'm talking. If we start falling below the 20,000 kind of 300 territory, somewhere there, then yes, I will consider a move lower. And finally, let's have a look at the FTSE 100. This one is also, it's basically the same, moving the same way, but you know, UK is not enjoying the tariffs as well, but what can you do, right, at the moment? Just retaliate. But I think that the UK is not going to be one of those. They are going to retaliate because they do want to have a relationship, because that's kind of the only ally in a way, becomes the one of the only allies, strong allies of the UK. And yeah, they don't want to kind of, they're probably going to be very submissive and you know, just kind of go with what it is right now. So and then yeah, and then we'll see what's going to happen. But again, at the moment, looking at this picture, we did drop around 10% this year from the top. But from the beginning of this year, we have dropped. Let me just drop. There we go. We have dropped around 2.5% almost. So that's where we sit at the moment. At the moment, the index sits in negative territory for the year. Right, so ladies and gentlemen, let's have a look at the Forex world very quickly. So yes, beautiful result here. I mean, look at this fantastic movement. Everything worked like a charm this week. I talked about this and I said to you, we had a fantastic drop initially on Friday, continued on Monday, Tuesday, Wednesday, it all reverses back up from this 0.59 territory, a little bit slightly above that. We push higher. Then I said to you, look, if we do climb back above the 0.6025, I'm going to consider a slightly higher level, but I'm going to be careful with the 38.2, which is not like a little bit below the 0.61 zone. If it holds, another decline could be possible, but if it breaks, I will go higher. And there we go. Look at this move. Look at this beautiful move to the upside. We tested my upside line, the broken one, which I talked about previously. And so far, so good. Look, we're keeping an eye on the PPIs today, of course, but I would say at this point, I'm not really touching it. I really want to see what's going to happen here in terms of holding below this upside line. If it continues to hold somehow, I'm going to consider maybe something like this, and another maybe move back to the downside. However, we cannot exclude the upside scenario, so that's why I will keep an eye on this area right here. I will keep an eye on the this barrier right here, the 50-day EMA. If we can clear that one, which is at 0.6260, if we can clear that one, then great, more buyers could join in. AUDJPY, and yep, for now here, it's look, it's a risk on, risk off environment monitor. And what we're seeing here right now, that we're staying below the psychological 90 territory. If we continue to trade below that, I'm going to continue targeting the downside. NZD/USD. Now this one is a little bit better, to be honest. I mean, look at AUD/NZD. I mean, this one, you can see clearly that NZD is winning the battle here. The so-called the battle of the two risk currencies. They're the two commodity-linked currencies. And yep, we are seeing a nice drop here to the downside. Actually, by the way, while I'm on the AUD/NZD part, look at this. We're approaching this 1.0790 territory. 1.0720 territory. This is a key area of support. If we do drop and stay below it, not only drop, but stay below it as well, then yes, further declines are possible. NZD/USD, with the situation here, look, we had this week, we had the RBNZ. Where's that interest rate decision? There we go. they dropped the rate by 25%, 25 basis points. And in a way, you would say, wow, this is like bearish. And it was initially bearish, but then it kind of stabilized because the US dollar has been on the weaker side, and this is kind of the main game plan here. Look, we're approaching key resistance, in my opinion. We are approaching this 200-day EMA together with the 0.5830 zone, which both of them had like played as strong areas of resistance recently, but again, if that gets cleared, then yes, I will go for some higher levels. But at the moment, I'm not in a rush because again, if DXY somehow stabilizes a little bit, let's say it tries to pop back above the 100 zone, then NZD USD could kind of slow its acceleration. But if the US dollar continues to decline, then we could see this pair jumping nicely above the 200-day EMA. US dollar against the Japanese yen, that's exactly what I'm talking about here. So look at this. We cleared the 144.55 territory. I spoke about this area on Wednesday, and yep, so far so good. My next target is the 142.06, or in general the 142 zone. And then we'll take it from there. US dollar against the Canadian dollar, looking good here on the Canadian side. And look, this is something that the BOC, the Bank of Canada, was probably waiting for to happen naturally, and it's a kind of I think it was a big bet from their side because again they kept on cutting rates, and when the Bank of Canada was one of those banks and is still one of those banks that probably will at this point would just kind of sacrifice the currency and just kind of support the economy. And this is what we're seeing right now. So the US dollar is taking a hit, and yep, other major counterparts are enjoying their moments against that. So we on the USDCAD side, we dropped below the 200-day EMA, and my next target on this one, well, this is where I need to search a little bit, but probably the 1.3822 becomes quite an interesting one for now, at least in the near term. US dollar against the Swiss franc, I mean, this is unstoppable to the downside at the moment. Look at this. I talked about this this year on Wednesday. We had a rebound. Yes, everybody was enjoying the moment, but then the US dollar just keeps on falling like a fly, and I mean, this is just wow. So we were at the beginning of April, just last week, we were here. We were in this little range here. I talked about it. I said, look, be very careful because this can, yeah, like, I mean, the theory went here when I was talking about this. The theory was that whenever we start ranging, we look at the prevailing trend. The prevailing trend was to the downside. In that case, the greater chance for this one is to break out lower. And well, in this case, it worked out, but as I always say, wait for the breakout itself. And there we go. We got the breakout. We are moving nicely to the downside here. And wow, I mean, this is just, wow, spectacular. And I think I'm running out of data here. Let me just try to find another chart here from TradingView. There we go. So I'm going to jump into a monthly chart straight away. Look at this. This is a monthly chart, and look at the levels where we are. So back in 2020, we were here. Back in 2020, we were kind of just here. This was the drop in March. This is when kind of COVID started. Then we were seeing this, these declines. Then we dropped the low. We found the low here in 2021 in January, and then we started pushing higher. Then, of course, back in 2023, 24, we had some up and down here, and we cleared. Now look at this. We cleared as the lowest point of December of 2023. Now, this is a monthly candle, but we have not finished the month yet, so don't get me wrong, this could still reverse back up. So if we do see a reversal back up here on the USDCHF, then basically this kind of points to a nice little false breakout, and maybe, just maybe, we could see this as a nice little double bottom pattern. But again, let's not rush into things. At the moment, we could see this as a range as well. But again, we need all now, like I said, now we need to see the US dollar kind of strengthening back up here and pushing back above that 0.8332, 35 zone, somewhere around here, just kind of staying. We need to see the body of this monthly candle staying above this area, and then we'll go from there. So yeah, we're living through interesting times, in my opinion. I think that yes, if it does stay below this hurdle, well, that's not looking good here for the US dollar. Let's jump into EURUSD, and I mean, of course, the US dollar on the weaker side. That's what we're getting. Boom. And did I tell you on Monday and on Wednesday? Look, what I need to do here is I need to wait for a break of that downside line, and then I'm going to go a little bit higher. Well, we went a little bit higher now, and I need to find now a good area of resistance, and what pops into my head is somewhere around here, near the 1.1483 or this 1.15. Basically, I think the 1.15 becomes the next good target. Let's see what's going to happen. Let's see if that's going to be the case. If the 1.15 is going to be that nice good target, but again, I'm cautiously going on this one because look, I'm not chasing. If I missed the jump, I would say, okay, I've missed the jump. Now I'm going to be looking for a possible retracement at some point. But look, am I getting the signals for a retracement? No, not really. Am I getting more signals towards more upside? Yes. However, for me, it's very uncomfortable when I need to jump in, let's say at these high levels like these, because again, it could really easily reverse back down. So EUROJPY, beautiful push back up here. Yes, so far so good. This is working out like a charm here, and this is what I talked about. Hey, I'm not really going to invent anything else. I'm going to continue targeting the upside. EUROAUD, beautiful retracement on Wednesday, and look at this. I talked about it on Wednesday. We were forming something of a shooting star. Then I said, look, keep your eyes on it. And then the market stabilized, and we dropped, and then the market yesterday and today, everybody's, like I said, still feeling the heat and feeling worried. And that's why we're pushing back above the 1.8121 zone. Yeah, so this is a key area of resistance which has been cleared. That's the highest point of April of 2020. Let's see if we can stay above this area this month. EURUSD, very quick update here. Yes, the Swiss franc is the one that's interesting, and this is working out so far good. Yeah, as I said, my next target is the 0.92. I'm still aiming for that one. Euro GBP, by the way, there we go. The pound is not feeling the love, but the euro is. So look at this. Look, I don't look at the Euro GBP very often, but it's just that this one, yeah, is just popping like crazy right now. Let's have a look at GBPUSD, and there we go. We're pushing higher. We pushed above that psychological 130 zone. I talked about it, 1.3014, and the next good target here could be the current highest point of April, near the 1.3207. Let's see if that we can reach that one. Very quickly on CHF-JPY, as I keep on calling it, the battle of the safe havens. Yesterday I just picked up on this one. I also threw out a piece here, the battle of the safe havens, when we were still in this little triangle, kind of a little squeeze here. I said to keep your eyes on some of these areas, and look at this. It worked like a charm here. I've almost reached my I would say I've reached my target, and yep, what can I say? I mean, this is working out this is working out great. We broke the downside line. We cleared the 173 territory. We almost reached my 175.80 zone. All good. Now I'm just gonna leave it as it is. I'm not gonna touch it, and I'm just gonna wait for next week. To be honest, I'm gonna see what's gonna happen this week, because if on this week, let's say if we continue to trade above that 173 territory, that's great. Yep, more upside could come going into next week. Let's jump into the commodity world. Gold. I mean, gold. A new all-time high, ladies and gentlemen. A new all-time high, not only yesterday, but today as well. I mean, 3,220, ladies and gentlemen, 3,220. Let me bring back my Fibonacci extension levels just to see if some of the levels worked out, because previously I talked about this Fibonacci extension. Again, it's a bit subjective, depends on how you're going to draw this, but 3,250, that seems like the next potential good target if we measure it this way. But again, the question is, are we actually measuring it this way? So what I'm going to do here is I'm going to take the recent, this lowest point of this week when we kind of started declining. I'm going to measure it from the rally that was started in February of this year. So after we dropped, after we saw the decline at the end of February, we started rallying, we started pushing back up again, and look at this, bang on, the 0.7860. This, or I should say 78.6% on the Fibonacci retracement here. Look at this, ladies and gentlemen. Let me just, actually, you know what? Where are those labels? Where are those labels? Because I want to touch those levels, percents. There we go. Okay, there we go. So we've touched the 78.6 here on the Fibonacci extension, which is drawn from the lowest point of February to the is it actually the lowest point of February? No, it's not the lowest point. It's the low of the last day of February, and we drag it to all the way to this previous all-time high that was reached in the beginning of April. Then we declined sharply, and now, like I said, look at this. Look how well this worked out. 3,220. We reached that perfectly today. That was the target. So now we're seeing, you know, like a bit of a moment where it's wobbly. It's not really clear what's going to happen next. I'll put it this way. If we start clearing the 3,220 zone, I'm going higher. I mean, 3,300, is that the new target? Look, it could be, but again, we need a clearance of that 3,220. If we can get that move, amazing. I will consider some higher areas. But again, at this point, we need to be very careful, very cautious here. It's really unclear what's going to happen, because look, if the US dollar can recover, then great. Then yes, we could see maybe a bit of a stabilization moment here. The only thing is that everybody's like jumping into gold, but let's not forget that if major economies start feeling the heat, they will have to sell some gold in order to raise cash. So yeah, that's the issue. So, you know, the value of gold could go down just because the supply of it could increase. So let's be careful with this, okay? I mean, at the moment, yes, it's a safe haven. Everybody's, you know, pouring into gold, but just like I said, just keep that in mind, what I just said. So let's see if, you know, if that's going to be the case. Silver, let's jump into that one. This one is a little bit on the modest side. I mean, this is not really going for any all-time highs, but the fact that it remained above the 200-day EMA, it climbed above it and remained above it, that's pointing a little bit more towards some higher areas. So at the moment, I'm going to just kind of keep it short and simple. I'm going to aim for the 100 and the 50-day EMAs here on my daily chart. Copper, one of my favorite metals here, and look at this reversal. Look at this test of the 200-day EMA. I mean, amazing. From this 4 zone, jumping straight away into, you know, 4, jumping 10% back here. I think that's great. So yeah, at the moment, no, actually, what am I talking? It's not 10%. Yeah, let's say from these lows, yeah, it is 10%. What am I'm starting to doubt myself, honestly. Yeah, so we jumped back 10%. That's great. Okay, that's good. We're taking a little bit of a pause. It seems that copper does want to go back up, but I'm not rushing into things, because again, if the stock market starts collapsing and there will be ongoing trade tensions with China, then China is one of the biggest consumers of copper. So just be careful with that. Now, oil. I mean, look at this roller coaster ride. Wow, what a drop we had! Like $55 mark here. We reached that one on Wednesday. We sold off heavily, but then we retraced because the stock market started pushing back up. And we found, okay, some of these levels have to go. For example, this one right here, yep. So we'll have to mark the high of this week. Let me just double check here. So the high of this week is here, near the 63.87 zone. So, but as I said to you yesterday, I am keeping an eye on that $65 mark. For me, that's the barrier. If we climb above it, okay, I'll consider some higher levels. But at this point, any move up until then, I'm still bearish. Natural gas, we're finding support near the 200-day EMA. That's great this week. So I think that what can we do now is, if we're looking for some lower levels, wait for a drop below that 200-day EMA. Coffee, very quickly, coffee, it's on an oscillation mode right now, in an oscillation mode. So we're oscillating around the 100-day EMA, so nothing really major here. If we do drop and stay below the 100-day EMA here, and actually we already dropped and we're currently staying, but if we continue to trade below that 100-day EMA, my next target is the 200-day EMA. Let's have a look at wheat. What's happening here? Nothing major. Sugar, sugar is interesting. It remains above. It did briefly drop below my upside line, but now it remains above it. Okay, interesting. Let's see if we can rebound and push back up. My favorite cotton is trying. It's holding here, and it's trying to make way back up again. But as I said to you previously, 67.66 is the target from which I'm examining the upside. 100-day EMA shown as the blue line here. If we can climb above it and stay above it, then yes, wonderful, wonderful. I will go higher here, and then we'll take it from there. And finally, for dessert, ladies and gentlemen, let's have a look at Bitcoin. Okay, I talked about this recently, and I said to you, look, it seems like we're in a falling wedge pattern. So that means that the downside scenario is not really off the table. And we could see some more downside. And given the fact that we're also trading below the 200-day EMA, that's kind of all pointing towards the idea that that more downside here could come. Very simple approach here. If we clear the upper side of the falling wedge, which in a way, according to all the TA rules, tends to be a bullish indication, but again, confirmation breakout is needed. If we can clear that upper side, then yes, great, I'll go for some higher areas. Bitcoin Cash, very interesting action here. Yes, we're pushing back up here, at least it looks like that. 272. So the 300 zone seems to be something that the Bitcoin Cash likes a lot. Okay, that's fine. If we can climb back above the 320 zone, I will consider some higher levels. Ethereum is looking good here. Look, with Ethereum, it's looking good. Why I'm saying looking good? Because it started oscillating. It's not really giving up. So it's not really giving up like, it doesn't want to fall below that 1,500 zone. If it can continue trading above that, there is a chance for this one to push back up. Ripple is rebounding nicely from that 200-day EMA. So now we've pushed back up to the 1.90 zone. If we can continue to trade above it, a larger correction back up here could be possible. And then we'll take it from there. Litecoin, $75 mark here. We pushed above the 71.5 zone. That's great. I talked about it. In general, I talked about this upside line here, taken from the low of the the lowest point of March of 2020. So yes, this long-term upside line, we rebounded beautifully from it, and it seems like we want to climb back up. Let's see if we do have enough steam. But what I want to see here, if this is going to work or not. So this is one downside line, and there's another one. We're recycling these lines here. Always recycle, ladies and gentlemen. I think, okay, this doesn't make sense. I think this has to make sense a little bit more. Yep, there we go. So if we do clear this shorter downside line right there, then I will consider some higher areas. Very simple. That's what I'm going to do, and then we'll go from there. Long story short, if we do, like I said, clear this $80 mark, then yes, wonderful. I will consider some higher levels as well. So this is probably my preferred scenario on Litecoin. Dogecoin, yes, it's still holding above that 0.1416 zone, but look, if it starts dropping, below this 0.1416, then great, I'll consider some more downside. And finally, Polkadot remains below my 3.57 territory. That kind of indicates my bearish approach here, and especially the fact that it still remains below the below this lowest, yeah, well, which is kind of, this is what I'm saying, like this 3.57, the lowest point of August of 2024. If we continue to struggle to push back above it, then yep, the downside scenario is not off the table. So maybe then we could end up testing that psychological 3 level. So, ladies and gentlemen, that's a wrap. Thank you very much for watching and listening. I really, really appreciate your time, your views, your likes, your comments, everything. Thank you very much for sticking around with me this week. This week was a crazy one, so hopefully you enjoyed you enjoyed my sessions. And look, if you wanna, like I said, get in touch with me, you can always do so. That's fine. You can always do that on LinkedIn. Just always message me first, just to kind of let me know who you are. But hey, thank you very much for watching and listening. I will kind of get back into action on Monday. I will get back into my live webinars on Monday. So hey, join me 7 o'clock GMT time. And just to let you know, next week the webinars are going to happen only on Monday and Wednesday. Friday I will be off. So hey, hopefully, like I said, hopefully, and next Monday as well. So basically, for the next Friday and the Monday after, this is where there won't be any live webinars. But hey, join me on Monday and Wednesday next week for more market updates. And hey, I'll see you later. As always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. Bye-bye.